Remember when I told you Applied Digital was setting up for a major move? Well, it happened. On February 8th, I called the breakout on this channel, and over the next few sessions, the stock climbed 9%, validating the technical setup. But here's the thing, that move was just the beginning. The real story behind Applied Digital is only starting to unfold, and what I'm seeing right now suggests we could be on the verge of an even bigger explosion. I'm Smart Stock Sam, and today we're diving deep into whether Applied Digital is about to explode, and more importantly, where this stock is headed next week. Let's get straight to the numbers. Applied Digital is sitting on a $16 billion revenue backlog, $16 billion of contracted, locked-in revenue. These are real commitments from real clients. The crown jewel? A $7 billion anchor tenant deal with CoreWeave. This provides revenue visibility that most companies can only dream about. Institutional ownership has surged past 65%. Big players like Vanguard and Marex Group are loading up. And analyst ratings are almost unanimous. 15 out of 16 analysts rate this as buy or strong buy, with price targets ranging from $45 to $58. That's massive upside from current levels. Let me take you back to that February 8th call. I showed you the technical setup and told you a breakout was imminent. Over the following sessions, the market validated that call. We saw momentum that pushed the stock toward $39.35. The move was powerful and decisive. This was reading the signals and recognizing when a company is transitioning from a speculative play to a true infrastructure powerhouse. After that explosive move, we've seen consolidation over the past few trading sessions. From February 10th through the 13th, the stock pulled back. But here's what's critical. The pullback happened on low volume. This is textbook bull flag behavior. The sellers aren't overwhelming the buyers. There's no mass exodus. Instead, the stock is taking a breath, consolidating its gains, and building energy for the next leg up. The volatility we saw in the broader market hasn't broken the technical structure here. Support levels are holding, and the pattern suggests that once we reclaim a key level, we could see another explosive move higher. But to really understand where Applied Digital is headed, you need to understand the transformation this company has undergone. Most people still think of APLD as a crypto mining company. That's outdated. Applied Digital has executed one of the most impressive pivots in recent market history. They've gone from mining Bitcoin to becoming what I call an AI factory landlord. They're no longer chasing digital gold. Instead, they're providing the essential infrastructure that makes artificial intelligence possible. They own the power, the cooling, the physical real estate, and the connectivity that AI giants desperately need to scale their operations. This isn't a commodity business anymore. This is a utility play on the most transformative technology of our generation. Let's talk about that $16 billion backlog again, because this is the moat. This is what gives Applied Digital its staying power even if the broader market gets choppy. These aren't one-time transactions. These are long-term lease agreements that generate recurring, predictable cash flow for years into the future. The $7 billion CoreWeave deal alone is a game changer. It provides a floor for the valuation. Even in a worst-case scenario where growth slows or the market turns sour, that contracted revenue acts as a safety net. It's the foundation that lets management invest aggressively in expansion without worrying about next quarter's revenue. And then there's Nvidia. Let's be clear, Nvidia doesn't throw money around carelessly. They are the kingmakers of the AI revolution, and when they make a strategic investment, the market should pay attention. Nvidia invested in Applied Digital at an entry price of $87.20 per share. The stock is currently trading around $38, which means Nvidia paid more than a 100% premium over today's market price. Why would the smartest money in the AI industry value this company so much higher than where it's trading right now? Nvidia understands that in the race to scale AI, infrastructure is the bottleneck. Chips are useless without somewhere to deploy them, and Applied Digital is solving that problem at scale. Now let's talk about something that doesn't get enough attention: power and cooling. As AI workloads grow more intensive, the infrastructure requirements become exponentially more challenging. You can't just plug 1,000 GPUs into the wall and hope for the best. The power grid in most regions is already strained, and traditional cooling solutions are hitting their limits. Applied Digital has positioned itself ahead of these constraints. Their partnership with Babcock and Wilcox enables on-site natural gas power generation, which means they can bypass grid congestion entirely. On the cooling side, they've invested $15 million into Corinthus for advanced liquid cooling technology. This is about enabling the next generation of AI hardware that will run hotter and denser than anything we've seen before. Applied Digital is solving tomorrow's problems today, and that's a massive competitive advantage. The financial trajectory is stunning. Fiscal Q2 revenue surged 250% year-over-year, with a 62% compound annual growth rate. They have a clear path to $145 million in profit by 2028. They're in aggressive expansion mode, and the path to profitability is laid out clearly. The institutional accumulation story here is remarkable. Institutional ownership now stands at 65.67%. Vanguard increased their position by over 36%. Situational Awareness LP is sitting on more than 11 million shares. But the most eye-catching move came from Marex Group, who increased their holdings by nearly 40,000%. When an institution ramps up exposure that aggressively, they're not making a tactical trade. They're positioning for a structural shift. These institutions have access to information, research teams, and risk models that retail investors can only dream of. When they move in size, it's a signal worth paying attention to. And Wall Street agrees. The analyst community is overwhelmingly bullish. 15 out of 16 analysts rate Applied Digital as a buy or strong buy. Roth Capital has a price target of $58, representing 66% upside from current levels. Northland is at 56, B. Riley is at 53. Even the more conservative targets are sitting above $40. The gap between where the stock is trading today and where analysts think it should be is significant. That's what we call asymmetric upside. The risk-reward profile here favors the bulls. But there's another factor in play that could accelerate the move: short interest. Over 1/3 of the entire float, 86 million shares, is currently sold short. The days to cover ratio sits at 2.34. What that means is if the stock starts moving higher and breaks through key resistance levels, the shorts are going to be in trouble. They'll be forced to cover, buying back shares to close their positions, which drives the price even higher. This creates a feedback loop where the price can spike vertically in a matter of hours. If Applied Digital breaks above $40 convincingly, we could see that exact scenario play out. The options market is also telling a story. The volume put-call ratio is sitting at 0.43, heavily skewed toward calls. There's significant open interest at the $37 and $40 strike prices. Options traders are betting on a move toward 40, and when you combine that with the high short interest, you get the setup for a gamma squeeze that can lead to explosive moves in a short period of time. Before we wrap up, I need to give you a friendly reminder like always. Nothing in this video is financial advice. I'm not a licensed financial advisor, and you should never make investment decisions based solely on what you see in a YouTube video. Always do your own research, understand your own risk tolerance, and consult with a qualified professional before making any investment decisions. The stock market involves risk, and you can lose money. This video is for educational and entertainment purposes only. So where does that leave us for next week? Here's the setup. The key level to watch is $36.39. If Applied Digital reclaims and holds above that level, the path is clear for a move toward $45. That's the primary target. Beyond that, there's an institutional zone around $50 where we could see some profit taking. On the downside, support sits between $32 and $32.70. If we break below that level, the thesis changes. But as long as we stay above that support zone, the resistance at $39.35 is the only thing standing between us and a significant breakout. Here's the bottom line. Our February 8th breakout call was validated, But the fundamentals tell us this story is far from over. With a $16 billion backlog, Nvidia's backing at nearly double the current price, and a healthy technical consolidation setting up the next leg, Applied Digital looks like a coiled spring. The pieces are in place, the institutions are accumulating, the analysts are bullish, and the shorts are trapped. Watch that $36.39 level closely. If it holds, we could be looking at a move toward $45 or even $50 in the coming weeks. If you found this analysis valuable, smash that like button and subscribe to Smart Stock Sam for more winning trade setups. Hit the notification bell so you never miss when I call the next big move. Stay smart, stay disciplined, and keep building that winning portfolio. I'll see you in the next one.